Hey, good morning, guys. How the heck are ya? What's up, Ron? Trading in sim, huh? Man, I'll tell you what. Every morning I tell you guys to check news. Guess what I forgot? Well, actually, I checked news. Guess what I forgot to do this morning? Forgot to look at my darn clock. Good morning, Izzy. When the music gets quiet, you're hoping to hear a human. There it is. I'm as close to human as you're going to get today, I guess. Man, every morning I tell you guys, go to forexfactory.com, check your news, don't trade into some crazy emotional response. And this morning I had it, I talked about it, and I told my brother watch out for it, and I got into a position that fit my rules, and I got stopped out in about a 16th of a second. Rookie mistake, fastest $300 loss I've ever taken. Thank goodness it was only 300. But that's okay. Guys, every morning, checking news. 12,000 buy orders, that's a lot of buy orders. So, why do we turn it into a routine? Because we don't want to get caught the way I got caught, guys. You don't want to trade into this emotional response. Hey, what's up, Ed? Good to see your face in here. A trade just before room close yesterday, as well as 5 more in an hour after room close. Love your mom. I love it. I had a great afternoon yesterday too, man. The market was cool cranking. Today is Wednesday, October 30th. Tomorrow's Halloween. Don't be that jerk that doesn't give out candy, guys. We had 8:15 high impact news. We had 8:30 high impact news. And what was kind of funny is the 8:15 high impact news created this huge spike. Good morning, Nanda. And then at 8:30 a.m. there wasn't a whole lot going on with it. I didn't get a whole lot of action. At 10 a.m. we have pending home sales, guys. That can create a little impact, a little move, a little jump, a little bump. And then for you crude oil traders, 10:30 a.m. crude oil inventories, guys, every day. The morning may see them jockeying for position, trying to get in place for that news release. And then at 10:30, crude oil has the potential to jump and spike. So, guys, this is our morning news, and this is a part of the routine every day. But I proved today, guys, without question, that even the people with the most OCD and the firmest routines, they're still going to make mistakes every now and then, guys. I traded directly into 8:15 news, and it got me. It totally got me. But it's all right. I waited, I followed my rules, and I hit my goals. So I'm all good today. Everything that I talk about, hey, good morning, Jeffrey Dean. Everything that I talk about every day, guys, 99% of it, I'm not going to say all of it, 99% of it comes from the trading guide here from the Nexgen page. And the first page, you look in the morning, yeah, me too, Iron Mike. Me too. The trading guy here, guys, this is what I'm going to talk about. This is really the direction I'm headed each and every morning. One of my favorite things about what I do, and maybe it soothes my mind that likes patterns, is I talk about the same thing every morning. We talk about the same looks, the same rules, and we talk about the exact same trade every morning. And for some people, and I may have been one of these people in a previous life, they're like, okay, I saw it, I heard it, I got it, I'm done, right? And then some people are like, all right, I need to hear it again, and I need to see it again, and I need to do it again. And that repetition is what really makes the average person good at what we're doing. So the repetition that I shoot for in the beginning, and the patterns that I talk about in the beginning, and the rules that I talk about in the beginning, guys, are the best of the best, the highest probability, the most likely chance of success. And we do it through the high probability trade, guys. The high probability trend trade is a trade that typically wins 70 to 80% of the time if you follow the rules. The high probability trend trade, because of that win percentage, creates an awful lot of success. There are people that say that confidence comes from the memory of success. So this is a trade that will build confidence. And this is a trade more than anything. It's going to teach you to read your indicators. It is. You're going to look at your charts and you're going to say, oh my gosh, I understand what's happening. I'm reading my charts, I'm reading my indicators, I'm recognizing advantages. And guys, you're going to come to believe that advantages are the only reason that you're taking trades. I'm working with a gentleman right now, and it's pretty outstanding when you one-on-one a process, right? When I throw everything out here to the classroom, guys, remember it's very generalized. That's hard to say. There's a lot of blankets being thrown over you regarding rules and stuff like that. But the best education comes from when I begin to see what you're doing, when I begin to see your trades, your thought process, stuff like that. Guys, that's where we really delve in, and that's where change comes from, I think. The more information you give me, and I'll cover why that's important in a minute. But let's talk about this trade. Why do we do the high probability trend trade first? Why are we building this foundation? Because this is the trade that wins more than it loses, guys. This is the one that teaches you to read your indicators. And reading your indicators is, I think, the most important thing you can do. It's fun to tell people you're a day trader. I tell people I'm a chart reader. I sit on my butt for 90% of the day doing absolutely nothing, waiting for my rules to be met. Once my rules are met, guys, life gets pretty easy. 10% of my day is spent trading. But 90% of my day, honest to goodness, is doing not a darn thing, because my goal is to get paid. My goal is to win more than I lose. So I trade patterns that have been proven to win more than they lose. Once you're good with your chart reading, and this is kind of a lot of fun, you're going to understand where the market is likely to continue. And in the beginning, this is your entry for the highest probability trend trades. You're going to understand where the market is likely to go. This is going to help you with targets, understanding where the market is most likely to end up when you take that trade. And then finally, you're going to understand where the market is likely to stop. And guys, these are key Fibonacci areas. These are areas on a larger, really slow, broad stroke of a brush chart. And these are the areas where the people that move the market are going to make decisions. And these are the areas that can create reversals and bounces and pull you out of your trades. And you're going to be able to look at your chart and you're going to be able to analyze this stuff quickly. And you're going to be able to make decisions based on your analysis. And that's the goal. My job for the first hour is to help you become a chart reader, is to help you understand the information that the indicators are giving you. We're going to do it with the high probability trend trade, because let's be honest, everybody showed up to Nexgen because you want to make money, right? So I'm going to give you the path of least resistance. I'm going to give you a plan that has been proven to win more than it loses. It's a plan that's relatively easy to learn. It's only 3 rules. And you're going to take a week, 10 days, and you're going to be like, oh my gosh, I understand these rules, but you're going to practice it over and over for the next few months until it becomes second nature. So the easier you keep it in the beginning, guys, the quicker you're going to get to where you want to be. I've been doing this for a long time, and I promise you, the less you look for, the more you tend to find as a brand new user. So we're going to look for 3 things, 3 rules, and each rule creates an advantage or verifies that an advantage is in place, guys. Rule number 1 is going to give you strong trigger lines. That's the advantage of momentum. Momentum pushes a market in the direction of the trend. It takes momentum typically to break key Fibonacci areas. And guys, momentum will cover a lot of the mistakes that we tend to make as new users. That's the reason it's the first rule. The second rule is no termination conditions. None of those likely to stop the market areas, guys. And that's going to give you room to your profit targets. And this is a big deal. If your goal is to get paid, you should have room to make money, guys. And we're going to call this one a clear path when the rule is true. Momentum and a clear path. And I typed this in the room earlier, guys. And if you're curious about things and you see me typing a lot in the morning, go reread it and look at the pictures. It's usually just a private session because 2 of us ended up here at 4:45 in the morning. Momentum and a clear path is everything to me. Momentum and a clear path is everything that I need to have a consistent and a profitable trading plan. Momentum and a clear path, guys. You are a loaded down semi doing 120 miles an hour on the highway and there's nothing in the way. It's just hard to stop. So I encourage you guys, really get good at these two. And then your entry areas will present themselves. Your first one is for the high probability trend trade. And this is rule number 3. It's specific to the trade, guys. And this is the one that pinpoints exactly where the market is most likely to continue. There's precision here. So much so that you're going to use limit orders and you're going to wait for the market to come to you. These 3 rules happen on only 2 charts. And you're going to see people with more charts in this room. You're going to see people trading range charts. You're going to see people going to higher time frames. You're going to see people incorporating minute charts and all this other stuff. If you're brand new, the easiest way to get to where you want to be is let it be 3 rules and let it happen on 2 charts, guys. And everything starts on the large chart. The large chart leads the way. The large chart is a slower moving chart. It is a very broad stroke of a brush, guys. And on the most current bar of the large chart, you're going to determine the direction of the market, and it's going to tell you exactly which direction you should be looking for trades. It's going to determine the momentum of the market through rule number 1 and let you know if you have a market where the odds are favorable for it to push in the direction of that trend. And then finally, it's going to define the areas, the places that you're potentially going to trade to, or that you're going to refuse to trade into because the market's already gotten there and decisions are being made. And that's rule number 2. 66% of your advantages happen on the large chart. 66% of your advantages are recognizable on the most current bar on the large chart. Guys, keep it simple. Once the rules are met, once the rules are true, I'm going to say only when the rules are true, turn your attention to the small chart. Go to this faster chart. This is a refinement chart. We looked at the picture yesterday. I'm going to show it again just so you get a visual of what it means to refine that 1 bar on the large chart. Inside of 1 bar on this higher time frame, this slow moving chart, guys, there's typically 20 to 30 bars on a small chart. And from the very bottom of the bar, you're going to see these retracements and these pushes. And the very top of the bar is going to be where that little retracement stops. And this is the refinement process that we use to pinpoint precisely where the market is most likely to continue. So the advantages remain on the large chart through the duration of the entry, but the small chart is going to show you the movement within that bar. And this is how we get so precise, guys. And by using this refinement chart, we reduce risk dramatically. And we actually increase the distance to our profit targets. So 2 charts, very, very clear representation of who you're trading with or against. There's a big crowd and a small crowd. And guys, this is very layman's terms. This is creating a visual and by no means 100% accurate, right? But the large crowd, guys, all of these people, they create trends. They have the power, they have the money to create trends. And the easiest thing to do is simply go with the trend that they've created. These people have the potential to create momentum. And it's easier for you to go with the momentum that they create. And these guys react to key Fibonacci areas. So your life is so much easier if you don't put yourself right into one of their decision-making processes, because they don't ever telegraph what it is they want to have happen. They do it regardless of your feelings. Once these guys give you everything you need to look for an entry, guys, there's the small crowd. These are the people that fight. These guys are hooligans. They wear leather jackets and smoke cigarettes outside of the high school. These guys create little ripples, little fights, little pushes against everything the large crowd wants. These guys fail 70 to 80% of the time, which is why when you use this refinement chart to pinpoint exactly where the market is most likely to continue, what you're doing is you're pinpointing exactly where the small crowd is most likely to fail. That's what becomes your entry for the highest probability trend trade. We're going to capitalize on their failure so that we can go with the flow and trade with the large crowd, guys. And that's really the easiest way to do what we do. So every day in the first hour, we learn the trigger line of the Fibonacci rules for when it's okay to trade. We learn the trigger line of the Fibonacci rules so that we know what it looks like when they're met, because that's what means that it's okay to trade. If they're not met, why trade? If you don't have the advantage, why are you getting in the market? I want you guys to simulate, and I want you to practice, and I want you to mess things up, and I want you to learn to be okay making mistakes. Simulator gives you the luxury of being able to never lose money. Participating in the class gives you the luxury of never losing money while you develop the ability to read the charts, guys. The first step in becoming a confident trader ASAP is you posting pictures in the room. You're going to practice all day long. You're going to take trades. You're going to take the right trades. You're going to take the wrong trades. You're going to break rules. You're going to follow rules. But here's the deal. Every time you post in the room, you're going to tell me about the rules that you are following or breaking. You're going to talk about that momentum through rule number 1. This is important, guys. You're going to talk about whether or not you had a clear path, and you're going to show me your entry. And don't just show me your entry. Show me your exit as well. Because what happens is we go through this process each and every time. And I'm going to say hypothetically, I'm just going to call out a name. Iron Mike gives me this chart. And Iron Mike says, check it out, Mark. I have strong triggers. That's rule number 1. And he says, and I didn't reach this area. This is rule number 2 being met. I have a clear path. And Mark, I got in right at an area inside of favorable large triggers. This is where I took my first profits, but then it pulled right back to another entry. So I carried it all the way down to here and I exited right at the key area. And what I'm going to do is I'm going to say, Mike, you're a rock star. You should be teaching this class. But I'm going to say your read on momentum is absolutely perfect. And your idea of a clear path is 100% in line with what I teach. Your entry makes sense and it gave you the least amount of risk. And your exit makes sense. You actually got the absolute most out of this trade that you could hope for. Great trade, Mike. And Mike's going to be like, oh man, that was pretty easy and painless. And now I just confirmed that I am getting good at this. And that's what we're going to do, guys. Every time you post in the room, it's a private session. Every time you drop that picture in here, we're going to talk about those rules. We're going to look for ways to do it better if we can do it better. I'm going to identify challenges that you may have been facing. But my goal is to always celebrate. My goal is to always celebrate victories and try to correct mistakes. And if you're not making mistakes, guys, if you're not making mistakes, you're lying to yourself. If you're not posting mistakes, you're hurting yourself because mistakes are where you're going to make the most progress. We will simplify. You're going to hear that word a lot. We're going to simplify. We're going to say, hey, you know what? It doesn't have to be hard. It doesn't have to be difficult. I don't need 173 indicators and 94 charts to be able to take a $200 trade, guys. I need 3 rules, 2 charts. You've got to know what the looks are. You've got to know what you're going to commit to. You've got to know what it looks like when the market isn't moving so that you know what it looks like when the market is moving, guys. And that's the second piece of the puzzle to becoming a confident trader ASAP. Use the spreadsheet that I'm going to give you, that Nexgen gave you. And the spreadsheet, the way I have it and give it to you every morning, we are up to 5 tabs. Probably too many, but that's okay. The first tab is a trade journal. That's all it is. That trade that Mike gave me, Mike, I'm just going to call you out all day today. That trade that Mike gave me, he's going to put it into a spreadsheet. And he's going to go, man, that was my trend trade short, and I had momentum, and my path was clear, and I made easy money. And the feedback was, holy crap, Mike, don't ever miss this trade. This is the best of the best. This is when it's easy. This is your highest chance of success. And then maybe Mike has another one and he breaks a rule and he loses some money. And the feedback from class was, man, this didn't fit the rules. This is what you can work on. This is what you should have noticed. You're going to do it better tomorrow. Because tomorrow, Mike's going to study everything that he did today. Tomorrow, he's going to look at his trades and he's going to say to himself, what worked? What was bringing me success? What made it feel easy? What kept me relaxed? But he's also going to say, what didn't work? Did I break a rule? Did I fight momentum? Did I trade into an area? And guys, this little study each and every morning, and it'll take you 3 or 4 minutes while you drink your first cup of coffee. It's going to set you up for the day. You're focused on advantages. You're focused on avoiding disadvantages. And this is also going to accelerate the learning, guys, because you're going to begin to recognize patterns in the market that are bringing you success. You're also, and I think most importantly, going to recognize patterns in yourself that are taking that success away. And that's where I feel like I'm in the gifted and talented class. Forgive me if this sounds like a brag, but one of the things that I'm good at is I will recognize your patterns. I will recognize your tendencies. And we will work together to steer you away from things that are problematic and to really embrace and celebrate the things that are bringing you success. And it's that feedback process, realizing what you did right or wrong. That's what gets you where you want to be. So that spreadsheet, fill out your trade tracking, study it every day. We're going to break down each rule individually as we go through the high probability trend trade. We're going to talk about strong triggers all on their own. We're not going to put it into a trade. We're just going to recognize strength. And then I'm also going to focus on weakness. What does it look like when the rules aren't met? When is my advantage gone? Because when my advantage is gone, I no longer have a high probability trend trade. We're going to talk about that clear path, what it looks like to not be trading into areas, but we're going to do a lot of study on what it looks like when we reach these areas that we shouldn't be trading into. Know the difference between the two. And then we also define those entries. Guys, this is breaking down each rule individually so that you can piece them together to create a trade. And that's what these are. On the next tab, the client trades. This is literally piecing it together into a trade. This is you guys being brilliant in the room. This is Mike's trade that I stole, that I put into the spreadsheet. And I said, this follows the rules so amazing. I want to make sure that everybody can come study it. This is momentum. This is clear path. This is entry, guys. These are clients using these advantages to their advantage. There's a little bit on NASDAQ. Guys, NASDAQ trades about 10 times faster than crude oil or the S&P. NASDAQ is a little bit advanced. And if you're not comfortable with your rules, NASDAQ is going to chew you up and spit you out. So you're going to get excited because you're going to see me posting NASDAQ trades. You're going to see John Novak and a couple other people posting these NASDAQ trades. NASDAQ moves fast. You have to know what you want or it becomes difficult. You're going to have to manage these great entries that you're learning to take. There's a whole section dedicated to it. There's patterns that repeat themselves. And this is one of the wonderful things is once you learn the rules and you know the looks and you commit them to memory, you're going to begin to see more opportunities in the market over and over. You're going to see these great opportunities and they will fall outside of the high probability trend trade. Twisted Sister, little bit. They're more like speed metal. I would say NASDAQ is the slayer of the futures markets. So we're going to go through this process together. We're going to learn the rules. Metallica, yeah. We're going to simulate. You're going to simulate. You're going to practice. And then we're going to simplify, guys. I'm going to give you a plan that takes the highest probability trend trade and teaches you how to take it with the highest chance of success. And then we're going to let that chart reading that comes from that plan take you to the next trade. Showing your age, Ron. It's gotten faster since Ozzy. All right, let's go through the rules. I want you to do me a favor. I want you to write down on a piece of paper, interrupt the class if I don't understand something. Type in the room if I don't understand something. If Mark says something that doesn't make sense, force him to explain it. That's your job, guys. We're going to start on the large chart. And the large chart has to have strong triggers, and strong triggers create the advantage of momentum. Large chart will define the direction, the momentum in the areas. Yeah, both of them, Pete. Again, showing your age. So let's start with trend. If the large chart background is green, the market is going up. I'm going to look for rules to be met for high probability trend trades long. That's pretty easy. If the background is red, the market is going down. I'm going to look for rules to be met for high probability trend trade short. It doesn't mean that I have a long trade, and it doesn't mean that I have a short trade. What it means is that I'm going to look for the rules to be met in the direction of the overall trend. In order to have strong triggers in an uptrend, your small triggers, these solid lines, must break above and away from these large triggers, the dashed lines. When the small triggers, oh, awesome. Have fun, Mike. When the small triggers break above the large triggers, that's what paints the background green. So in order to have strong triggers, my background has to be green, my small triggers have to be green, and my large triggers have to be green. Those colors are going to want to match. My large trigger should be wide, and it's the separation, guys. It's that gap between small and large lets me know that the odds are favorable for the market to continue up. This is what we call odds favorable momentum each and every day. Odds favorable, guys. This is when a market is likely to continue in the direction of the trend. This is the look that can break key Fibonacci areas. This is the look that can cover mistakes. And when we have strong trigger lines on the large chart, it's going to always look like strong trigger lines if we get a trade. But you're going to see these tails or these wicks form on the large chart. You're going to use the refinement chart to define exactly where these tails are most likely to form. And that is a potential entry for the highest probability trend trade. You're going to pinpoint where those tails are most likely to form, and you're going to use that as a study guide. In a downtrend, background's red. Small triggers are red. Large triggers are red. Trigger lines are wide and angled in the direction of the trend. The space between the two lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. Guys, strong trigger lines is not a difficult read. This is probably the easiest lesson you're ever going to get. Strength, and it pushes down. Strength, and it pushes down. This is crude oil. Strength, and it pushes down. Strength, and it pushes up, guys. And what you're going to do is you're going to commit to strength. And you're going to go back and you're going to look at these. You're going to say, wow, I have strong triggers. Rule number 1 is met. I love that. But you also have to be able to say, holy smokes, my small triggers have returned to the large triggers. My scissors have closed. The gap is gone. And this is a weakening of the large triggers, guys. And this is literally your indicators telling you. Zorro, the trend is slowing down. Rob, you don't have momentum. Izzy, you got game, but you don't have strong triggers. And guys, this should be when you say my rules aren't met, I'm going to sit on my hands and wait for that momentum to reappear. Weak triggers can cause retracements from the middle of nowhere. Weak triggers, when they reach those key Fibonacci areas, those key Fibonacci areas are more likely to hold. So weak triggers is the absence of the advantage. Strong triggers is when the advantage is present. Is everybody good with that? That's rule number 1. It takes me 3.5 minutes because you either have it or you don't. It either is or it is not. There's very little room for the brand new user. Everyone's good? Yeah, you are. Termination conditions false, guys. Rule number 2. Termination conditions false. Not trading into an area that may stop the market. This is going to give you room to your profit targets. I'm going to call it a clear path. Once I have momentum, I have to make sure that there's nothing in the way. So a termination condition, guys, it's a Fibonacci-based indicator that may reverse the market. And one of the things that you're going to hear me say in this room over and over are crazy words like may and might and could and has potential. The one thing, the only certainty in the market is that you'll never be certain. You'll never be able to predict. The only thing you'll be able to do is recognize a pattern that is testable, that is repeatable. And you'll create this idea of whether or not that pattern wins more than it loses. Termination conditions, when the rules are true and a termination condition is present, it stops the market more than it doesn't, which means that trading into it is void of an advantage. So we're going to use horizontal lines on a large chart, guys. Easiest way to say it. Lines on a large chart are where decisions are being made by the large crowd. Lines on the large chart can stop the market, can create a bounce, can reverse it completely. The lines that we look for, divergence highs, when the market goes up and comes down 2.5 bars. Your software is going to run a calculation, and if the software has determined that momentum did not follow price, you're going to see a magenta line from a high or a divergence line from a low. Guys, all that is a loss of momentum, but you know it's there because of the line, because of the negative number. The negative number has nothing to do with anything other than the calculation process. You're going to look for red Fibonacci resistance. This is that red line, and when the market is trending up, this is a point where the market may stop. It may bounce. It could reverse completely. When the market is trending down and it reaches a blue line. Hey, good morning, Andy. Good to see you, man. This blue line is Fibonacci support. Fibonacci support is a point where the market may stop, may bounce, or it may reverse completely. We're also going to use yellow 1-to-1s. They're the exact same as Fibonacci resistance when the market is trending up, and they do the same job as support when it's trending down. And guys, we're going to use these lines because we know without question this is where the large crowd is making decisions, where the buyers buy, where the sellers sell, where the buyers and sellers fight. So what we're going to do to determine whether or not it's a termination condition, that's a lot of determining, is we have to let price reach an area. There's two things that I want you to say every time you're looking for a trade. Did price reach an area? Did price reach Fibonacci resistance? Did price reach Fibonacci support? Here you would say price reached resistance. Here you would be forced to say price reached support. Right here, you would say something clever like, wow, price has not reached support. Price has not reached resistance, which means that's a target until it's reached. This is a target until it's reached. But when price reaches Fibonacci resistance, I want you to go to the next step. Where are my triggers? Say it out loud, guys. Make the dog's ears perk up. Price reached the area. Where are my triggers? If my triggers remain below resistance, if my triggers remain above support when price reaches that area, this is an area that may stop the market. This is an area that may create an untradeable bounce. This is the exact point where decisions are being made by the large crowd. I don't want to get caught up in their decision-making process. So if my triggers remain below, if my triggers remain above, absolutely no trades into that area. I'm not going to hope it breaks. I'm simply going to let it break, guys. And if it breaks, awesome. We'll look for the next trade. But if it reverses, if I get a termination condition that reverses the market, I'm going to call it a strong top. From resistance, I'm going to call it a strong bottom from support. And what that means is that the decision made was so impactful that it completely 180'd the market. And any trade that you take after that has a higher chance of winning. So areas hold a lot. Let's look at it. Let's go back to the large chart and just for grins, guys. Resistance stops it cold. Support keeps it from moving. Resistance breaks, behaves as support, and it bounces right into resistance, right back into support, and look at the big untradeable bounce. Your job is to go look at some of these, to study these, to write the rules. Price reached the area, where are my triggers? They're above support, no trades. And what's going to happen is you're going to learn to respect these lines over time. Rule number 2 is the most broken rule out there. This should be a big focus of study, guys. Go see how many times rule number 2 stops the market. Go see how many times these Fibonacci areas create a big, ugly, untradeable bounce. And what happens is you're going to ultimately make the choice not to trade into them. You're going to wait for them to break. And identifying a broken area is pretty easy. If the small triggers and the large triggers, both lines of each, get below support, or if the small triggers and the large triggers, both lines of each, get above resistance, that area is broken. That path is now clear, and it will remain clear until you reach the next area. And it will remain clear until you reach the next area. And guys, areas break. Areas break a lot. But more than 51% of the time, if the triggers remain below, they're not broken, they're more likely to hold. Once the small and large get through, support begins to behave as resistance. Resistance begins to behave as support. And I think we saw a beautiful example of that, didn't we? Where both small and large get above resistance, and look at how it behaves as support. Small and large get below support, and look how it behaved as resistance. Guys, these key Fibonacci areas let you know where the reactions are most likely to happen. Even this little one, you see them tap back and test it. You see them pull back and test it. And right to the tick. Pulls back to resistance, and none of the triggers got above. They shot past a little bit, but sure enough, that market continued down right next to the key area. So if you're a brand new user, learn the difference between the two. Take pictures of termination conditions, take pictures of clear paths, drill it into your brain what it means to have your rules met. And what that's going to do for you is set you up for the second trade that's going to be in the plan that I give you guys. And momentum can break areas. You learn that in rule number 1. That's one of the things I say 50 times every morning. Momentum has the potential to break areas. Your trigger lines are going to show you that potential, guys. So when 50% of my trigger lines are through the area, and 50% of my trigger lines are not, small smash through, larger lagging behind. Guys, this is what we call the 50-50 trade. 50% are through, 50% are not. Momentum can break areas. The 50-50 trade is trading the potential of that area to break due to the momentum. But the area is not broken because the large triggers are still above, because the large triggers are still below. This is not a high probability trend trade. Rule number 2 isn't met, which means that you're going to have to manage these a little more aggressively. You're going to have to make sure that you have the other advantages in place, that your risk is low, and that you take quick profits in case something changes. Guys, this 50-50 trade is going to be the majority of your trades. I'm going to give you a plan to take it with the highest chance of success, I promise. There will be times when your path is not clear because areas are stacked a bit. Guys, this is 90% of your day. In a 6-hour day, you might spend 36 minutes trading, guys. It's okay to do nothing. The other day as a class, we went back and typed into Google, how much money do the futures markets trade during the day? And I thought it was 220 billion a day. I really did. But when I looked at the wording, it's trillions of dollars every day. It averages $220 billion an hour. We're trying to catch our little piece of the 220 billion, and there's an easy way to do it. Have momentum and a clear path, guys. So I don't have to be in every move. I'm going to learn to be okay doing absolutely nothing. And the successful traders separate themselves from the herd because they're the ones that do nothing when there's nothing to do. You don't have to be in every move. Every tick isn't your tick. Every swing isn't your swing. You don't have to be the first one in, and you certainly don't have to be the last one out. And understanding rule number 2 and believing in this Fibonacci, guys, because Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. Likely. They could. They might. Not guaranteed. They don't send out a fax, guys. But very often, rule number 2 can keep you out of consolidation and chop. And this is one of the biggest things that when experienced users come to my classroom, they're like, rule number 2 saves me so much money because I used to get caught in these ranges and now I can clearly define them. And waiting for a break out of them tends to be advantageous, guys. You know where they're likely to react. It's okay to sit in that 90% range, to do absolutely nothing, because the one thing that I'm pretty sure of, and it's happened pretty consistently for the last 5 years, is another trade is coming. Another trade is always coming. But human nature, you guys try to make your $1,000 a day in the first 8 minutes of the market. Be cool, relax, there's plenty of time. So, rule number 1 gives us the advantage of momentum. Rule number 2, make sure that we're not trading into areas that could stop the market. Would you guys please do me the honor of giving me a why in the room if you're doing this? Sorry, and you confused me there. Give me a why in the room if you're comfortable with momentum. Give me a why in the room if you feel good about the recipe for termination conditions. Guys, I don't ask this because I'm insecure and I need to know that you're listening. I need to know if you have a question because my job is to answer it. So when my rules are true, I'm going to look for an entry. That's my job. My job is to get into the market and get paid. I'm going to show you one more termination condition. When I turn my attention to the smaller, faster chart, there is an instance that'll tell me not to take that next trade, guys. 3 divergences in the same price range. 3 magenta lines from a high, 3 cyan lines from a low, guys. This is 3 losses of momentum in the same price range. This could reverse the market. This could terminate the trend. This could create an untradeable bounce. So 3 divergences at a low or 3 divergences at a high tells me that rule number 2 isn't met. My path isn't clear. And you're going to see this happen when the market appears to turn from the middle of nowhere, or maybe they shoot past fibs and then go the other direction. You're going to see it through 3 divergences. But if it's not there, Let's get precise. Let's use the refinement chart and let's pinpoint where the market is most likely to continue. And we are going to be pretty exact, which means that I'm going to use a limit order. And I'm going to buy or sell a pullback, and it's going to be at areas. Fibs, mid-bands, yellow 1-to-1s. On the large chart, we use areas to determine where problems can be. On the small chart, we're going to use them for entries. And I want those areas to be inside of triggers. More specifically, brand new users, you want those areas to be inside of what we call favorable large triggers, because favorable large triggers are going to give you the smallest window of opportunity for entry. They're going to give you the least amount of risk. They're going to give you the highest precision in pinpointing where the market is most likely to continue. And guys, favorable large triggers means that the large triggers on your small chart and the synthetic triggers on your small chart are overlapping, one on top of the other, like two snakes riding piggyback. This is the best of the best look. My mouse is like super fast. Best of the best look, because one of the things that happens is these large triggers on both charts, all they are is moving averages. That's it. There's some math that goes into it. I don't know math, but what I do know is that on the small chart, these price bars are most likely to return to the large triggers. And on the large chart, which is the same chart, same price, they're likely to return to the large triggers on the large chart. That's what these synthetic triggers are. So when they're overlapping, price is likely to return to the exact same location on both charts. And when there's areas inside of there, there's just something to bounce off of. So every time you look for an entry, especially as a brand new user, you'll do this without thinking about it eventually. But until you get to that point through the repetition, guys, I want you to say every time you look for a trade, the small chart price may retrace back to the large triggers. Might, could. I have 1-to-1s and I have a fib. And these are areas inside of those triggers that may produce a bounce. This is where the market may continue with the trend. But I have two sets of triggers, and I have to say to myself, the large chart may retrace back to the large chart large triggers. Price may come back to the synthetic triggers. They're on my small chart. I can see it here, so I don't have to look left anymore. And I have a mid-band inside of those triggers that may create a bounce. It may return to the triggers, and it may bounce off of the areas inside of the triggers, guys. So this is how we create our little window where the market is most likely to continue, where the small crowd is most likely to fail. First, we define where the price bars may return. Those are the trigger lines. And then we define where the market is most likely to bounce. That's areas inside of those trigger lines. So the tighter these triggers are on top of each other, the least amount of room there is to put an area inside. So let's define it. When my large chart has told me that the trend is up, I choose to look for rules to be met for high probability trend trades long. When my large chart tells me that I have strong trigger lines and I have the advantage of momentum, I'm going to look for areas on the large chart to be sure that I have a clear path. And if I do, I'm going to turn my attention to the small chart. And I'm going to take a picture of this one because we're going to have some fun. About the time I decide I need to be looking for an entry, my small chart's going to be somewhere right over here. And right here, your gut's going to start to twist and you're going to say, oh my gosh, they're going without me. And right about here, you're going to contemplate just jumping into the market and hoping that it goes. Right about here, you're going to say, yes, I definitely need to jump in this market because I'm missing out on every penny. And right here, the small crowd fights. And guys, they produce a reversal bar. This is the patience piece in the beginning, waiting for the perfect entry as a brand new user. This reversal bar signals the beginning of the pullback. This reversal bar signals the beginning of the fight from the small crowd. This reversal bar is not your entry, guys. This reversal bar is the first close over here on the wrong side of these triggers, the wrong side of that momentum, and this is what has me looking for those triggers. All right, the fight started. Where is the market likely to return? Well, the market's likely to return to the large triggers or the synthetic triggers. I don't know which. but I'm going to identify that area, and then I'm going to look inside of it. I know that it may return to the triggers, but it's most likely to bounce off of an area inside of favorable large triggers. So I'm going to see what I have. I have a mid band way up here towards the top, and I have yellow 1-to-1s down here inside of triggers at the bottom. And guys, this right here, this is the range. This is the point where the market is most likely to continue. This is the point where the small crowd is most likely to fail. Because of the momentum and the clear path on the large chart, you're going to activate a limit order 2 ticks above that highest point of support. And you're going to say to yourself, if the small crowd has it in them, they may push back and give me an entry. You'll never be in control of it. You'll never have any idea if it's going to happen. You'll never know if you're going to win or lose. But what you do know, without question, if you enter the market at the highest point of support inside of favorable large triggers, that you have a recipe, a pattern that has been tested, verified, and proven to win more than it loses. And guys, this becomes your entry for the highest probability trend trade long. Any line outside of those triggers is outside of the window. This isn't a part of the equation. Anything below these trigger lines where the market is most likely to continue, that's why I encourage you to say that every time. This is the wrong side of the triggers. This is the losing side of the triggers. This is where the market should not go. Any line below those triggers is not a part of the equation. So let's do it again the other direction, because God bless futures. We can make it both directions, guys. Everything says down. The market is strong. The path is clear. And you resist the temptation to jump in, and you wait for a reversal bar. And the reversal bar is not your entry. The reversal bar says, hey, the fight is on. Where are those trigger lines? Are they overlapping one on top of the other? And you're going to say, here they are, from the top to the bottom. But trigger lines aren't what I expect to create a bounce in the market, guys. I need a line in there. I need a fib, a mid-band, or a yellow 1-to-1. And I have one line inside of favorable large triggers, and this one line represents the point where the market is most likely to continue, where the small crowd is most likely to fail. My limit order goes a couple ticks below that line, and then I'm done. I've done all I can do. I've identified my advantages, I've pinpointed my entry, I've activated my limit order, and everything is out of my hands at this point. What I do know is that these areas on the wrong side of the triggers are not a part of the window of opportunity, because this is where the market shouldn't go. I don't want to be in a trade up here. My advantage is gone. I've gone beyond the area where the market is most likely to continue. I've gone beyond the areas where the market is most likely to bounce. And guys, your ability to pinpoint where the market is most likely to continue gives you the ability to pinpoint where the market shouldn't go. And this is your first stop placement. Your initial stop will be placed where the market should not go, typically 4 to 5 ticks above the trigger lines. And if the small crowd has it in them, and they push beyond those areas, and they push to the other side of those triggers, guys, you're going to lose the trade. And right now, some of you are saying, whoa, nobody said anything about losing in day trading. I might have to reevaluate. Guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Every 10 high probability trend trades you take, you are likely to lose 2 or 3. Which is why we don't focus on wins or losses. We don't grade ourselves on whether the trade won or lost. We're going to grade ourselves on how well we execute the method. How well we execute having momentum, clear path, and entry, because this is the recipe that has been proven to win more than it loses. And if I take 100 of these trades, I'm going to lose 20 to 30, and I never, ever, ever get to decide which ones, so I have to take them all. I have to build that trust. More often than not, the market's going to confirm the trade with all those advantages. It's going to give you that reversal bar in the direction of the trade, whether it's up or down. This is going to be your first stop placement, guys. You're going to reduce your risk even further, and you're going to move your stop a couple ticks above or below that reversal bar. And it doesn't guarantee that they won't come get you, but it means that if they do, you're not going to lose a whole lot of money. And it's not uncommon to see you guys post in the room perfect entries, follow the reversal bar, and maybe lose $30, $40 instead of that hopeful $300 to $400 way out where the market is way beyond where it should be. So this is your highest probability trend trade, guys. This is the best of the best. This is the one that teaches you to read your indicators, that creates confidence. And this is the one that you've got to study because you've got to learn trust. And this is one of the things that I realized in some private sessions I was doing is, guys, trust is the #1 killer of traders. When you don't believe that this pattern is more likely to go to your target than it is to fail, you begin to second guess. You start moving stops. You start getting out too quickly. You start convincing yourself that this isn't your best entry and you should wait for it to come all the way up here. So I want you to take a little time and I want you to do this. Go back and study tails on your large chart. Circle them if the rules are met. If they line up with areas inside of favorable large triggers, guys, this is your pattern. This is exactly what you need to commit to memory so that you can make sure that you don't miss it when it sets up in the live market. And the more pictures you see and take of the perfect trade, the easier it is to catch it. When you have momentum, when the path is clear, and you get a pullback directly to an area inside of favorable large triggers, you're going to say to yourself, holy crap, this is the best of the best. This is the easiest. This is the trade that I never want to miss. Gary, thanks for this one. This is all the way back in June of 23. It's the exact pattern that we just talked about, and all that momentum carried it right to Fibonacci resistance. So you've got to go through and study this pattern. You've got to understand the little bits so you can catch the big move, guys. That's the best of the best. That's the highest probability, guys. And everything that you do revolves around your ability to recognize advantages quickly. To be able to identify momentum in a clear path and do it with such confidence that you can't wait to go look for the entry. And the fastest way to get there is not to keep taking trades hoping. The fastest way to get there is to take pictures. To take pictures of strong triggers and to take pictures of weak triggers and never mistake the two. To take pictures of a clear path and of termination conditions and not confuse them. And then to know what it looks like to have your entries, guys. But here's where you guys get upset, because now it feels like work. Guys, the job isn't just to take those pictures. Write on it. Don't just take it and leave it. Everything is green. My smalls are above the large with space between the two. This is strong triggers. This is odds favorable momentum. And there's an arrow right to the look. And what I just did is I created this correlation between the visual and what it means to me to have an advantage. And I do it again. Strong triggers, rule #1, momentum. This is exactly what it looks like. Strong triggers, rule #1, momentum. I know exactly what it looks like. Going up and down. If I take 25 pictures and take the time to write, I'm never going to go, hey, look at these strong triggers. They're all red. Well, that's not the recipe. Look at these strong triggers. They're below the fib. That's not the recipe. These are some weak honking triggers. And look at the retracement. So guys, what you're doing is you're developing recognition. You're getting there. Repetition is going to take you to where you want to be. So I'm going to give you that little chart reading 101. I'm also going to give you the way to police yourself as you go through and you take these pictures as a brand new user, because you're going to be uncertain in the beginning. How could you not be? Is this really strong triggers? Well, here's the picture. Does it look like this? No, it's not. Does it look like this? Absolutely, it's strong triggers. It's almost too easy. And there's your weakness. Don't confuse them. This is your termination condition. There's the recipe for it. There's your clear path. There's your recipe for it. Uh-oh. That's not broken. That's not a clear path. That's only the potential to break. That can't be high probability. How do I define my entry? Where do I put my order? Guys, everything you need broken down into individual pictures. You're going to learn to piece them together to create a trade. When you do that, I'm going to give you this. This is the trend trade checklist. This is the second page. You should print this out. I won't give you trading advice, but I sure will give you study advice. You should print this out. You should put it on your desktop. You should take the most delicious crayon you own and make sure that you can mark yes to each and every one of these, because nobody in the history of this checklist has ever marked yes to each and every one of these and done worse than 70%. My goal is to get paid. I don't need to be in all the trades. I want to be in the best trades. You can also use this on market replay, and you can literally pause the market and make sure that your rules are met. So once you've got the looks, right? You're like, okay, I get it. Momentum, clear path. I can find my entry. I did my study. I'm feeling pretty good about it. Now you need a plan to follow. This is your business plan. Trading is your business. This is your business plan, guys. This initial plan, the KISS plan, it's a stepping stone in your learning journey. This is the beginning. This is the first step, the foundation. This is the trade, the plan that has been proven to win more than it loses. This is the one that optimizes your chances of success with the high probability trend trade. Through simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your ability to read the indicators. That's AI telling you, guys, when you can read your charts, you're going to see things. When you understand momentum and a clear path, you're going to say to yourself, holy crap, I could have made a lot of money right here. And I've seen this 100 times, and 80 of them, it worked. I'm going to put that into my plan. You'll see that once you get this high probability trend trade down, once it starts to make sense. But there's a very simple plan for consistency. The most simple plan for consistency. Ed Nichols on the way. How Not to Commit Financial Suicide. One Easy Step by John Novak. Chapter 1, Warning Signs Your Friends Are in Trouble. Ladies and gentlemen, they are trading against strong triggers. They're fighting momentum created by the large crowd. Chapter 2, Warning Signs Your Friends Are Paying Attention. They trade in determination conditions. They hope lines break rather than allowing them to break or roll. Guys, if you can eliminate these two mistakes, you're like 70% better than most of the traders that I work with every day. Define your entry. Great entries create manageable trades. Define your entry. Getting into the market where the market is most likely to continue is always the best bet. Define your entry, because that entry is chock full of advantages, guys. And once you understand how to pinpoint where the market is most likely to continue, well, you know exactly where it shouldn't go. And this is where your first stop is. I told you it was coming, Ed. I can't look at that picture and not think of you. Guys, this is where your first stop goes. You don't know if it's going to get hit. You don't know if it's going to win. You don't know if it's going to lose. You don't know if it's going to chop around in that little area for the next 3 days. The only thing that you're sure of is that your rules are met. That's the only thing that you'll ever be in control of. And after that, once you're in, once that stops there, there's nothing to do. You're either going to get stopped out of that trade, or it's going to confirm the direction and it's going to give you a reversal bar. That reversal bar is your first stop movement. Your trading plan, your management plan, is just as mechanical as your entry in the beginning, because you're learning to read indicators. It's just as mechanical because rules help eliminate fear. And this is if then. And what you're doing is you're learning to trust the process. If I don't get stopped out, then I will move my stop 2 ticks above the reversal bar in the direction of my trade. And there's nothing to do now. Sit on your hands, put them in the air, put them on your head, grab your dog, do something, and wait to see what happens next, guys. And then it becomes if then. If I don't get stopped out of this trade, then it probably went to my first target. The KISS plan is designed to get you paid. The KISS plan is designed to get you comfortable taking profits out of the market, even though you think it's going to do something else. So your first target is $100 away from your great entry. And with all of those advantages, even on trades that fail, this one gets hit a lot. And if it reaches your first target, then your new stop is break even. And there's nothing to do. I will not move my stop again. It's either going to hit my second target or I'm going to get stopped out for break even, guys. I've already been paid. I've already made $100. That's in my account. I'm already feeling confident. I'm already learning to trust the entry. I have absolutely nothing to lose. And I do this in the KISS plan. And I put this into the KISS plan. And this stop drove my brother nuts. But what you're doing is you're learning to trust the large chart, that it leads the way, that this is the direction you should be going. You're learning to trust that odds favorable momentum and absolutely nothing in the way is more likely to push that market down than it is to see just a random reversal in the middle of nowhere. So going break even may not be the best stop placement ever, but just like your entries, through a little simulation, study, class feedback, you'll be empowered to create a management plan suited to your goals based on your ability to read the indicator. And you're either going to make $100 and get stopped out, or it's going to go to your second target. And once again, guys, the goal of trading is to make money. The goal of trading is to get paid. The goal of trading is not to make all the money in the first hour, but rather take the highest probability scenarios with the best chance of success, get into the market at the best spot, be willing to get paid with the understanding that you will find the next trade, that there will be opportunities to make more money. Second target's $200 from the entry, guys. That's it. $200 from the entry, which means that if you take a high probability trend trade to completion, and that's the only trades you take every day for the 252 trading days in a year, that's $75,000 in your bank account, or in your trading account at least. Most of you do 400 to 500 every day pretty easy, and that puts you into six figures. Some of you have gotten real comfortable and you're up in that $1,000 range. And guys, there's some of you in this room that are doing 3, 4, 5, 10 times that. And it's not that you're taking more trades. It's not that you're taking higher risks. You're taking the exact same high probability, best chance of winning trades, and you're adding a couple contracts. And then suddenly your $300 winner with the same management becomes a $600 winner. And that $600 winner becomes a $900 winner with the exact same scenario. So it's not about all the trades. It's not about needing the most trades. It's about taking the best trades, guys. And that when it's time to go live, when you've practiced, when you've posted in the room, when you've filled out your spreadsheet, when you recognize these patterns, when you've begun to develop a little faith in management and you don't freak out and move stuff super fast, you're going to say it's time to go live. It's time for me to take this plan on the road to see if I can execute when the pressure's on. And guys, I'm going to tell you a secret right now. If you can't keep your stops in place on simulator, you're going to suck a pleat into your chair that you'll never get out once you go live. So build the memory. You have to know why you'll enter a trade, and you have to know why you'll exit a trade, guys. And these two concepts are unique to each trade that you take. In each trade that you take, the rules that get you in have got to be patterns that are proven, that have been tested, that are repeatable. And they've proven to win more than they lose. That's what creates the statistical advantage. And it's the process, the execution of these rules that creates success, guys. And so you've got to focus on the process. In the beginning, don't focus on the money. Focus on the process. You don't say, well, I won. You say, I followed my rules. My rules win more than they lose. I don't care what the result is. And it's this trust that makes trading become a little easier, guys. Rules remove the emotion. Because you'll never know if it's going to win or lose. Accept that. But you will know that the pattern wins or loses more. And that's kind of what you're focused on. So this is why I scream simplicity from day one. This is why from the very beginning, I encourage you guys to not look for all the trades, but rather look for the best trades. Because for the high probability trend trade, you need to understand the 3 rules. And then once you're into that trade, you need to manage it. So as a brand new user, the easiest way to do that is with a very basic entry, the highest chance of success entry, and with that very mechanical management. And then as you start getting good at it, you're going to begin to recognize patterns that may change your management plan, guys. These are some examples of things that will have me exit a trade. And sometimes I look for re-entries, sometimes I don't, but my plan evolves. And then that 50-50 trade enters the mix, and it's a different set of rules, which means that if you're not so familiar with the high probability trend trade rules, you run the risk of mixing the two, of confusing the two, of maybe taking a 50-50 trade believing that it's a high probability trend trade. You've got to get good at one before you add the next, because the 50-50 trade has different management. The momentum trades have different management, different entry rules. The HVA trades have different management, different entry rules. You could go from having 3 charts or three rules and 2 charts and 5 things to think about, really. And you could turn that into 55 things, the more trades that you add. So get really good at one thing. The other stuff will present themselves. So every day, I like to say something a little cocky and a little clever, like I'm going to give you everything that you need to be successful with the software. So there it is right there, a zip file labeled everything you need. We have talked about the rules for the high probability trend trade. We've broken them down individually. You've been given sheets on how to study them effectively. You've been given a classroom where 15 hours every week. My sole purpose is to give you feedback to make sure that you're reading them correctly. You have the ability to simulate. Even if you're on demo, Nexgen got you the Ninja Trader platform. You have a working copy of the software. All you have to do is practice and post. Post in the room. Ask your questions. Let me know what you see, what you think, why you did what you did. That's the second half of classroom, guys. Nothing but feedback. You've been given a plan with 2 trades. You have been told that you should learn the first trade before you try to take the second trade. Because when you take the second trade, guys, it's a different trade. And when you take the second trade, it's not high probability, it's medium probability. It has different entry rules, different exit rules. And you've got to learn the looks so that it becomes easy. You now have everything that you need to be successful with the software. The only thing that I can't give you is experience. I'm going to share my personal journey real quick, and then we're going to take a break, guys. When I started with the software, I was given this picture by John Novak, and he told me, hey, Mark, write down what it's going to take to get you into a trade. I didn't have any freaking idea what it was going to take to get me into a trade. I had no idea. So he gave me some rules. He said, write these down, Mark. Go take 10 pictures of long trades and go take 10 pictures of short trades so that you know what it looks like. So that seems easy. And he said, and then here's the other thing I need you to do. I need you to practice these trades. I need you to post them in the room because, Mark, I can't give you private sessions on Skype. I can't give you private sessions via email. He's like, I'm running a company here. You're special to me, but you're not that special, let's be honest. So post in the room and ask for feedback. And he left it at that. He said, all right, here you go. Here's the videos. Here's everything. And guys, in that advanced class, I couldn't follow him. I didn't understand it. I didn't have the ability to understand a word that he was freaking saying. So I chose not to take pictures. And I chose not to write down my rules. And I chose not to participate in class. And I believed that because I had the software, I was entitled to win. And I did, and I got lucky. And I got real lucky. And I got so lucky that I went live 30 days in. And I said, you know what? I got $6,000 in an account, sold my house in Houston, and I dedicated $6,000 of my profits. And I said, this is going to be my trading account. And I sat down that day, and I said, oh, I'm going to be rich. And 21 trades later, 5 of the $6,000 in my account were gone. And I didn't understand why. I didn't know why I lost. I didn't even know why I entered. I had no idea how to manage. And I didn't ask for 1 ounce of feedback so that I wouldn't repeat mistakes, guys. And it was right at that moment where I said, F John Novak, F day trading, F Nexgen. This is some bullshit, because if I couldn't do it instantly without practicing a second, this has got to be some snake oil nonsense. True story. Is how I felt. I was mad as hell at my brother. But I didn't do the work. And I talked to my brother, and I was like, what the hell, John Novak? And he said, all right. He goes, let's start back from day one. Sorry you lost that money. I'm sorry you struggled. I'm sorry it wasn't easy. So I want you to write down exactly what it's going to take to get you into a trade, Mark. And I said, you know what? That's probably a good idea. And I focused on the high probability trend trade, and I learned each of these rules individually. And he said, Mark, what I really need you to do is I need you to take a lot of pictures. Not just for me in the classroom, but I want you to take so many pictures, and I want you to fill up this spreadsheet. And I want to make sure that you know exactly what it looks like when your rules are met, because what this is going to do for you is it's going to slow down the market. It won't feel so fast. The indecision won't be there. You know exactly what you're looking for. And I said, all right, John, I'm going to do it. And I started taking pictures. And guys, true story, on my trade tracking sheet, I got down to line 279 because that's where it used to stop. It was right here at 279. And I was like, shit, I'm out of room. And I started a new tab. And I made it to 279. And I started a new tab and I made it almost to 279 before I went live again. In every one of those pictures that I took, I posted in the room, and I stopped hiding losers from my brother. And once I stopped hiding losers, once I told him why I was doing what I was doing, he said, Mark, you've got a little misunderstanding about momentum. Let's clear that up through the lessons, and let's make sure that you're always trading with that advantage. And then I was. And he said, Mark, you've got a habit. I've noticed this. This is a pattern that I recognize in you. You tend to trade into areas that may stop the market. If you go through this simple process of asking yourself, have I reached an area, where are my triggers? He goes, Mark, I'm very confident that we could eliminate that trade from the plan and eliminate those losses. And he said, Mark, you're scared to get in at the right spot and you're jumping in late and it's making your trades unmanageable. I need you to go back and trust this entry. Trust that stop placement. Let the market tell you when it's time to move your stops. And guys, I did that and I followed that plan. And I'm in a pretty good spot right now. And I hope that you understand that you'll get there too. But one of the things, and I know this is preachy, good morning, Cindy, is that you will get out of the software exactly what you put into it. And if all you put into the software is hope, that's probably what you're going to get out of it. But if you really commit to studying, if you really commit to the process, guys, you will get to where you want to be. There's no doubt in my mind. I've watched it happen with everybody that believed that they couldn't do this. I've taken dozens of emails. Mark, I think I'm going to quit. I'm no good at this. Guys, the KISS plan. The KISS plan was based on a conversation from a gentleman that was ready to quit. And all we had to do was simplify his life. Give him one great thing to look at. Something that could make money while he learned how to read indicators. So, if I seem passionate, it's because I am. It's because I've lived it. It's because I've broken everything that you will ever broken, and I've learned how to fix it. So what we're going to do in the second half, guys, is we're going to look at your charts and we're going to talk about advantages. Every chart posted in this room goes back to momentum, clear path, and entry area, no matter what kind of trade it is. Every chart in this room, guys, my expectation from you is that you define the momentum on your large chart, the path on your large chart. Show me where you entered and where you exited. Because if you don't tell me what you're seeing, how can I tell you if you're seeing it correctly? It's an educational room. Right on, no worries. So Jeffrey, when you come back, let me know that you got back and we'll make sure that you get all the feedback. No worries. Gotta love a signed contract. All right, guys. The difference between the successful traders and the struggling traders is the ability to do nothing when there's nothing to do. So we're going to go and look and define and see what we can come up with. Before we do that, I'm going to be really honest with you. I can't sit in a chair for 6 hours straight. Doesn't make sense. Doesn't make sense to me. Look at all those terminations on crude oil. That's nuts. So when I come back, we're going to start looking at pictures, guys. Go stretch your legs. Do a little yoga, whatever you need to do. Oh no, Andy, I hope you feel better. I'll be back in 5 minutes. We'll start reading charts, guys. We're going to get into the second half of class. I'm going to scroll up to the very top of the day and we're going to start looking at the pictures that you guys have posted. We're going to go back and talk about the 3 advantages on each and every one of them. If you have questions, I want you to post them in the room. If you have comments, drop them in the room. If there's a concept you feel like you need a little more help on, drop it in the room. Guys, I don't have a whole lot of pictures going on right now, so there's a whole lot of opportunity for you guys to get some pretty cool lessons in here. But Steve Diego got us going, and he actually got us going with 6 pictures. So I'm going to click on all of them, and we're just going to see what's going on. And this is some pretty light annotations for Steve. So I speak Steve Diego fluently. I want you guys to see this. Odds favorable momentum. OFM leads the way. There's nothing in the way. So odds favorable momentum. Room to the next target. Steve finds a way with all that momentum to just grab a hold of some cash. And I absolutely love this, guys. Once you understand momentum and clear path, you're going to find a way to get paid. And that's exactly what Steve just did there. Strong triggers, separated from large, odds favorable momentum. And Steve says, man, it's not a clear path. Not at all. And what you did, Steve, is you went short directly into 3 divergences right at a fib. And it didn't work. But because of Steve's ability to manage, because of Steve's ability and willingness to say, hey, this is not the perfect trade. This is not my best look. This is not my highest chance of success. I still like the look, but if I take this trade, I'm going to get paid quickly, I'm going to get out quickly, and I'm not going to get stopped out if this termination condition does exactly what we anticipate a termination condition to do. So Steve, you're showing how being a chart reader allows you to manage trades more effectively. Price is above the large, strong triggers, small triggers separated from large. With this momentum and trigger look, price has the potential to get to fibs. So Steve says the entry should have been here, 2.5 points lower than there's the entry, but it might have been going fast. The entry is there. The momentum is there. And once again, he takes quick profits. He takes quick profits. He says this trade is based in momentum. So I'm not going to wait for the momentum to die. I'm just going to get paid and wait for the next trade. Next one. Off of resistance, everything rolls. The momentum is strong. And then just like we saw before, a little bit of a clear path. He takes the first shot. Gets paid quickly at the fib because he knows it's not a home run. Avoids the bounce, and then when it all heads back down and he clears trouble, he does it again. Guys, notice that none of his trades are $300, $400, $500 trades per contract. None of his trades are home runs. None of his trades are hope and areas break. Every trade that Steve has showed us has room to targets, and it's coupled with momentum. And Steve, you are just killing it. Everything says up, the momentum is there. He takes the momentum style trade and it fails. He gets a loss of momentum. And Steve says, wait a minute. I recognize this pattern. With everything going up, with the potential to break, this fib's more likely to hold. This is Nexgen's momentum style trade. I'm going to hold my position. And he gets paid. Small wins again. Nicely done, Steve. And same old, right? There he goes again. Exact same look. This is one of the things you're going to notice. And Steve, dude, I hope you're listening. This is amazing. When every one of your trades look the same, you're following a plan. When every one of your trades has the same advantages, you're following a plan. When every one of your trades has the same looking entry and the same looking exit, you're following a plan. And your plan is based on a pattern that is proven to win more than it loses. And guys, if you want to know the secret to success, go back and look at each of Steve's charts. They're all the same. Steve isn't hoping, he's not wishing, he's not wanting. He's doing the same damn thing over and over, taking small profits repeatedly because that's the easiest way to get paid. Steve, what a great way to start the feedback time. I mean, you crushed it. Speaking of people that do the same thing over and over, strong triggers, clear path, quick in, quick out. Odds favorable momentum and clear path. Odds favorable momentum and clear path. Steve, beautiful. Beautiful, beautiful, beautiful. What a great trade. Same look, guys. Momentum, clear path. Momentum and clear path. Thank you, Pete. Oil inventories, guys, in 5 minutes. And I love what Ron wrote on his chart, and I'm sorry I missed that, Ron. What Ron wrote on his chart, and I love this phrase, and this comes from a gentleman, Nexgen Ben. Wait until it's obvious. One of the things my brother always told me is that if it takes you longer than 5 seconds to determine whether or not you have a trade, you probably don't have a trade. You're probably breaking a rule. You're probably fabricating a scenario. And that has proven to be true in my trading. Another gentleman with a solid plan. All the momentum, everything says down, gets in quick, gets out at a fib. $2,500, guys. $2,500 trade over a matter of seconds, exiting where the market is likely to stop. Pete, out freaking standing. No, not again. Everything says up. The strength is there. And Pete takes a trend trade. Pull back right to support inside of favorable large triggers. And because of the large chart, he holds his position and carries it all the way up here. And guys, that's freaking amazing. That's gutsy. This is understanding patterns. This is believing in strong bottoms and odds favorable. And Pete, great job. That one would have had me puckering a little bit. 3 divergences coming right off that fib. But your large chart led the way. Yeah, I definitely would have puckered a little bit on that one. But guys, confidence comes through the repetition. Confidence comes through the memory of success. Pete has seen this same scenario play out 1,000 times, and he knows that it wins more than it loses. And guys, your plan will change. $6,200. That's amazing. It's so much fun to watch you guys really come into your own and really start to see these things come to be. All right, Andy left the room, but we're going to check it out. Everything is down. There's room to the next target. Sold shorts twice. So we got in right at the perfect and added on and got paid all the way down. Andy, I hope you watched the video because that's amazing. All right, Wayne. Sat and watched this look for 11 minutes, looking to put a buy limit at 58.79.50. Placed it 3 times and talk yourself out of it. Walk me through your read. Absolutely. 11 minutes just for that 1 bar to print. So you are the NASDAQ. What time are you on Eastern time frame on your charts? Because that's going to help me. My first comment is that the market closed at 315 and it opened at 330, and the S&P doesn't do squat after the 315 close. It's an American market. The volume is virtually nothing. And if the volume is virtually nothing, that you are more susceptible to the will of the people that did show up. But let's just break it down into a trade. You have the potential to break. You have odds favorable momentum. You did have an area inside of favorable large triggers, right? Does it fit the rules? That would be the question. Does it fit the rules? Cool. I'm going to do this real quick. Do you trust those rules enough to take it like this? If you do, that's your entry. You know where your stop goes. That's it. It's just the potential to break. But then you brought this chart into it. And it said, and it talked you out of it. So I want to go back to the S&P at, my chart will say 552 yesterday. And I want to see what happened. And that was it. And let's go back here and let's just see what happened. And this is what I'll do sometimes, guys, is I'll just go back and I'll say, all right, how did it turn out? So here was your entry. So Wayne, okay, you're Eastern with the time. So this was it, though. We got you right here. It's a 50-50 trade. It has the potential to break. So Wayne, you didn't have divergence. You and I had a little tick discrepancy. And I'm going to give you my read from my charts. And let me know what you think. And I'm going to write it out. I'm coming from a strong bottom. I have odds favorable momentum. I have the potential to break. So KISS plan for the medium probability trade. KISS says no. You didn't have divergence, so go. With me so far? Your rules are met 100%, Wayne. 100%. That's your entry. Is it high probability or medium probability? This is, guys, this is where knowing what kind of trade you're getting into pays dividends. So it's medium probability, not a clear path. I will need to respect, manage at trouble, targets that are a set number means squat to me in this scenario. Right here, Wayne, if you're in a 2-lot, that's your half off, go break even spot. Right here at trouble. If I'm in at 78, I'm out at 81. At least half of my position, and I'm break even. And I get stopped out of this trade break even. Because this is only the potential to break. That's all it is. So you had the great entry. You had your rules met. Everything in your plan said take this trade. You talked yourself out of it with a third chart. Does that make sense? And this is why, and I love this chart, Wayne. I love it. I love this chart for the white bar trade, a little confirmation. I love this chart for those HVA lines. But very often people add this chart and they start talking themselves out of the right trades. So that's my read. My read is exactly like your read. My read says, take it here, manage it here. It's not a home run. It's a medium probability. Great picture, dude. Thank you for sharing that. I hope that all made sense. And guys, if I ever read your charts and it doesn't make sense, just tell me. Go, dude, Mark, that doesn't make sense. All right, 8 range. Don't know what that is. Can't even see it, not even using it. Saw price coming back to large triggers, synthetics, and a blue fib inside a synthetic. Set a limit, went right by me, not a good entry. All right, Jeffrey, are you here, Jeffrey? I'm about to tough love you. I want you to know that. Less than expected inventory speed. Steve, you want to thank Ron for showing the way to the chili dog? I want to thank Ron for showing the way to the chili dog. I screwed it up for a month and a half straight. All right, so we're going to come back to Jeffrey Dean. But we're going to turn it into a lesson anyway. I'll have my picture made for him. It's a different company, Big Dog. Oh, is there a known and named Nexgen trader? Is this one you identified? Notice that when the triggers on the large are up strong in green bar with multiple midget dots. Give me a minute, Big Dog. We'll get to it. All right, guys. Help me out here. And we're using the large chart, small chart. So I'm going to cover this nonsense over here. Do I have odds favorable momentum on this chart, guys? What do you think? Small's above the large, large or wide, space between the two. The market's likely to continue in the direction of the trend. Do you guys see it? I hope so. Do I have a clear path? How do I know? Did price reach an area? Where are my triggers? Price reached Fibonacci resistance. All of my triggers are below. Joel says, no, Mark, that's not a clear path. And then just for grins, here's my triggers. There's the only area inside of triggers. Rule number 3 is not met either. Look at this stop. 91.9, $240, $480 worth of risk. So guys, if this were your trade, what do you suppose may have gone wrong? And this is a great conversation that I had with Tom earlier. Guys, this strong bottom doesn't make you invincible to following the rules. Having a strong bottom doesn't mean that you're obligated to win. That areas suddenly won't hold. That termination conditions suddenly aren't a thing. I had momentum. I had absolutely nowhere to go. And not one entry inside of favorable large triggers was taken. And guys, the stop was $480 worth of risk. The correct stop is, let me do the math here, $300 higher. $300 higher. So if I used the area and I used the correct stop, if I just believed that was going to break, I had $50 worth of risk per contract. Guys, great entries create manageable trades. Respecting these lines keeps you out of trouble. So I'm going to beat Jeffrey Dean up when he comes back. Just so you guys know, if you are averse to bloodshed, I don't want you to watch that because it's going to happen. Because once you've been in my class for a while, I'll go after you every now and then. Everything says up, momentum is strong, there's nothing in the way. Ron says, I don't know if I mentioned this to you guys. Get paid. Get paid. Everything says up, there's nothing in the way, the strength is there. Get in, get the hell out, get paid. Base hits, guys. Base hits. Beautiful trade. Beautiful trade, Ron. Looks exactly like the other one he showed me, didn't it? Hold it. Well, maybe I lost it. Nope, there it is. Look at that. Let price clear, odds favorable, jump in. Easy money. Let price clear, odds favorable, jump in. Easy money. I mean, come on. Can it be that easy? Guys, can it really be that simple? Nanda says, is it too late to enter here? No, Nanda, it would be very easy to enter there. Should you enter there? Nanda, do you have momentum? Nanda, are the small separated from the large? Is there space in between the two? Okay, so let me ask you again. Do you have momentum? No. Do you have a clear path? Did price reach an area and the triggers break? No. So Nanda, why would you enter there? Because you hope it goes up? Do you see how easy that is if you always go back to the advantages? Nanda, if you said to yourself, I don't have momentum, I don't have a clear path, what you're going to do is you're going to change your language to, is it too late to enter there? And you're going to start saying to yourself, why the hell would I want to enter here? Let it break. Does that make sense? I love these charts, guys. And this is why I'm such a broken record all day. If you say out loud, I have momentum and a clear path, Nanda, wild horses shouldn't keep you from that entry. But if you say, I don't have momentum and a clear path, there should be no amount, no siren song that gets you into that trade as a brand new user. Does that make sense? I love this chart, Nanda, and I thank you for putting it in the room. Because that's perfect. Go back to it. Go back to those rules. Let it be easy. Awesome. You're welcome. Jeffrey Dean, you ready? I hope you made some money on that deal because I'm about to whip your ass, my friend. Respectfully. Respectfully. Jeffrey, how many times do I have to ask you to write rules on your chart? How many times do I have to ask you to say on your chart whether or not you had momentum, a clear path, in an entry area? Area inside a favorable large trade. How many times do I have to do it? That's your beating. You had momentum. You traded into a brick wall and you didn't have an area inside of triggers. You gave up 2 of the 3 advantages. Does that make sense? 2 out of 3 you gave up. Why? Because I hope it'll go up, right? I get it. So I'm going to show you how we did it. A lot of times, Jeffrey, no, you were going the right way. I don't know. No, you were going the right way. You went long. Your target was way up here in the middle of who knows where. But let's go deeper. That's all right. There are no bads in education, Jeffrey. There are 0 bads in education. So without the clear path, that's a huge red flag. Huge red flag. Look at that. No, it went the way it said it was going to go. Jeffrey, you didn't have an area inside of triggers, right? You just kind of jumped in arbitrarily at the triggers. And I'm going to tell you right now, Jeffrey, if you had entered at the area inside of triggers, if you had gotten in 2 ticks, if you had gotten in 2 ticks above the highest point of support inside of favorable large triggers, your risk on this trade would have been maybe $60 a contract for a grand total of $120. Does that make sense? At least then you only broke 1 rule. Cool. So you broke 2, and not only did you break 2 rules, and you put $480 worth of risk on a trade into a termination condition. So I'm going to go back to exactly what I just told Nanda. Guys, if you get in the habit of talking out loud these 3 rules, I have momentum, I don't have momentum. I have a clear path, I don't have a clear path. I have an area inside of triggers, I don't have an area inside of triggers. You're going to stop talking to yourself. You're going to stop talking yourself into the nonsense is what's going to happen. But you say you had to tighten up your stops. What you had to do, in my opinion, is not take the damn trade. $220 billion an hour. And you have to make sure that you don't miss this one. Does that make sense? I know, that's about as harsh as my beatings get. Jeffrey, momentum, clear path, and entry. This is what I want you to write on every chart. Because what's going to happen is you're going to say, well, no shit, it went down. Look what I traded into. And what you're going to do is you're going to start creating this recognition, man. You're going to start creating this idea that you don't have to be in every move to be successful. And the cool thing is, and the one thing that has been the common thread this morning, momentum and a clear path for the win. Momentum and a clear path has produced nearly every winner posted in this room today. There's got to be something to it. I just ran over my dog with my chair. All right, Miss Cindy. And this is Yovi's trade. Okay. So we're going to start on the large chart. I'm not even going to look at market flow. Do I have momentum? Yes. Hold on. Let's take a picture of it. I have momentum. And Cindy, I want you to tell him price never reached this area. Price can't bounce off of something it has not reached. This is like saying I threw the ball at the wall, but it bounced 4 feet in front of the wall and came back and hit me in the face. It never hit it. It's a 50-50, not a clear path. And this is going to be the one that I think he's going to like. If you're going to take a shot at this one, it was a good shot. Nice entry. This right here was your red flag. Remember when I said don't fight those triggers? Those triggers just behave to support. This has got to be a huge red flag. Oh my gosh, it hit the triggers and continued up. So you're taking a 50-50. He's taking a 50-50. It's not from a strong top, which we know very often results in a bigger bounce. These areas hold more often. I like the exit with divergence. Gave it a shot. Make sure he sees that lesson on fighting those small triggers, because those small triggers weren't a full bar away. And those small triggers created a bounce. And a close on the correct side of the triggers gives you tiny little risk. And then that divergence on the 50-50, you lose virtually nothing. Cut your losses in half. It's a good look. That bad top was the beginning of the sabotage. All right, Steve B. Everything says down. The momentum is strong and the market has the potential to break the key areas. Pull back to the mid-band. Mid-band inside of large triggers. You missed the proper entry. Got in below the blue fib as small triggers turned red. Could have moved second tight at the 1-to-1, but not fast enough. First and second target hit. Because when it's the right trade, Steve B, it goes. And I like this though. You said, man, I missed my best entry, but I'm on the right side of everything and I have room to run. Let me still get paid. That's some heads up trading. Is that the best entry? Absolutely not. Is it likely to run? Absolutely. Great job, Steve B. Steve B, are you in here? Have you grabbed hold of that lesson yet? When everything is screaming, as long as you don't get a close on the wrong side of those small triggers, that's going to continue down. This is such a great way, especially on the NASDAQ when it runs, such a great way to grab a little more out of the trade. Because as long as these bars don't give you a reversal bar that finishes above the small triggers, It's going to keep going down. Love the trade. I love the heads up entry. Not a high probability trend trade entry, but all this is catching the second half. Yeah, absolutely, Steve. And it takes a while and it takes practice. But that's a great trade. You didn't take the high probability trend trade. You took the second half of the high probability trend trade. Bill S. Great to see you in here. Been off for 3 months. Going to send a few in trade today. Let me see what you did here. Everything says down on every chart that you own. Not a termination. Big gap trade pullback to HVA. And you went long. All right. Bill S., I'm going to assume that you have more rules than I see. Because I see a large chart that's down with a clear path. And I see a 21, I'm assuming it is, with a clear path to the downside. And I'm seeing a range chart that has odds favorable to the downside. And you went long in an HVA below everything and expected it to run. And I'm not saying that I don't necessarily disagree with the trade. I'm not saying that maybe you didn't have something great here, but you fight a lot. And I think that what you'll find long term, I know there's more to it than big gap trade pullback to HVA. I don't know what gap you're referring to. If you had a fib right here, that's the perfect trade. But without that fib, this fib is more likely to hold. This down start is more likely to go down, and this is more likely to become a trend trade to hit the next area than it is to be a retracement up to the midband. I hope that makes sense. It won, absolutely. But is this look going to win more than it loses? That's one of the questions I always ask myself. Is trading against all of the direction? Yeah. You clearly, there's more going on in your brain than you told me on the charts. There's no doubt in my mind. 3 divergences in the same price range could create a trend, a push up, right? I like to catch this one on the beginning of the push up. Let the divergence be true. Give myself that little safeguard, that little, hey, let me increase the likelihood of success. I like it, and you knew exactly where it was likely to go, and you took profits, you didn't get greedy. Just a little more advanced, and I know that you have a plan. All right, we got 3 for Edwin. But I always have to point out what I see, because this is an education room. Large chart says down. Pull back to an area inside of favorable large triggers. Didn't believe it. Got in way freaking early. Gave up $50, $50 more risk, $50 less profit, and then got scared and jumped out. What scared you out, Ed? I love your large chart look. It's perfect. Your entry was here. Your risk should have been virtually nothing, and you got stopped out right at resistance, right inside of triggers. You were scared of losing money? All right. I'm going to do it. I feel like I'm being a jerk face today. I'm not trying to. Every day, for an hour and a half, every day, guys, I talk about one pattern that has been proven to win more than it loses. We're going to talk about trust. Every day we talk about the same pattern that has been proven to win more than it loses. Every day we talk about odds favorable momentum and a clear path. We talk about an entry at the areas inside of favorable large triggers. And every day I say great entries create manageable trades. Every day. And guys, I can say it till I'm blue in the face. And it doesn't matter. It doesn't affect your day or my day if you choose to listen to me. It might affect your day. So one of the biggest challenges, I think, and Ed, this isn't for you. You can listen, but this is for everybody. One of the biggest challenges when you're trading is fear. You're afraid to lose. Guys, if you have momentum and a clear path in an entry area, how do you adjust the fear of loss to the excitement of the potential to win? How do you change being worried about losing money and redirect it into being exciting that you just took a pattern that has been proven to win more than it loses? You have to trust that pattern. And 99% of the time, guys, when people struggle in trading, it's not because you can't read your indicators. It's not because you don't understand the patterns. It's because you don't wait for the patterns to transpire. You don't wait for that entry, because what if it goes without me? And then once you take this entry and it goes right up to it, you're like, oh shit, what if it blows through it? And guys, this is the what if monster. And this is a monster that I have created. And I'm going to get like a shirt made. The what if monster. What if it doesn't get to the area inside of favorable large triggers and it goes without me and I don't get paid? I better jump in early. And then when it finally gets there, because the what if monster gave you the poor decision, well, what if this is one of the 20 or 30% where this perfect pattern doesn't win and I get stopped out and I lose money? I better just take a small loss. And I'm going to tell you guys, if you don't trust, this is what you're going to do for the rest of your trading career. But if you do trust, and this is one of the best lessons I learned from my brother, and I thought he was an arrogant son of a bitch when he taught me this. He said, if I have these looks, if I have this look, if I have these advantages, if I have this entry, these mother scratchers are going to have to come get me. There is no way on God's green earth I'm giving up this trade in the wrong spot. They're going to have to come get me. They're going to have to come to where the market shouldn't go. And guys, that level of confidence comes from studying this pattern. So Ed, I'm sorry that you deep fried the golden goose and turned it into fried chicken, but the right entry went all the way to 62.25 and it went from 66.25. And that's $200 worth of profits. And if you were following the KISS plan to the letter, this is your $300 trade right here instead of your loser. Large chart says down. Momentum. You trade directly into the fib hoping it goes. And it's funny that you take the trade directly into a termination condition and you hold it for the distance. But the one with every advantage, you jump ship early. That's kind of interesting. Everything says up. You start to get above trouble. You trade directly into trouble once again, and you hold it. And then you get out just when everything is finally past the trouble and going. So Ed, I'm going to tell you the same thing I told Jeffrey Deem. You don't have to do this, man. And you know that I appreciate you being here. But until you start writing some effing rules on your chart, you're going to keep doing the same damn thing. Until you start writing why you did what you did, you're just going to keep hoping shit works out. Trust me, I know this. I've done it. I've done it. If you're not talking about your advantages, do whatever you want, right? You're my horse. I brought you to water. Guys, start writing your rules on your chart. Start it, even if it's not your rules. For the love of fuzzy. Talk about the momentum and the path, and you're going to get to a point to when you have both of these, you don't want to jump out of a trade. You don't want to get the hell out. You want to stay in. You want to get paid. You're going to believe in these two if you just start talking to yourself about them. Every time I look for a trade, I find a trade. You guys ever heard you find what you look for? Every time I look for a trade, I find a trade. When I was a kid, every time I looked for a fight, I found a fight. every time I look for my advantages to be there, I don't always find it. And it keeps me from finding a trade that I shouldn't be in. Just saying. Just saying. All you got to do is write some stuff. All right, big dog. You're not giving me anything to go off of. I have noticed that when the triggers on the large are up strong and a green bar with multiple magenta dots prints and antenna bar directly on an area of support on the market flow chart, I get a long and my trades win. Big dog, show me the large chart. Because I don't see any, I see a mid band on a 21 range, and that's cool. Is there support somewhere? Because I see odds favorable, momentum down. And big dog, I'm going to show you why we got to put it in perspective, right? Because that stranded sellers and it lost. That's the same and it lost. That one went up and it turned. There's got to be more to it than this, right? Now, big dog, if there's support right here and the market pushes up and pulls back with this odds favorable momentum, that bar is pretty sexy. Does that make sense? Why fight everything? If it's going to go up, I don't know that you did. I just don't have enough information to know. Show me both charts or show me all charts. Let's look at it. You may be onto something freaking amazing here. I just want to see. Guys, the market flow chart on its own does not produce trades other than, big dog, if all your charts have momentum, this pattern becomes an entry. If every chart you own has momentum, that's a great entry or a great management point. But the market flow doesn't call turns and get you in. There's got to be more to it. But I think you're onto something. I'd like to see the other charts. Because dollars to donuts, I could find some really good stuff. And then we could turn it into a plan with some rules, maybe. Awesome. Everything says up. The path is clear. But the entry's not so good, right? And you just kind of work through it. It's tough. It's tough to take the wrong trades. It's frustrating sometimes. It's a strong trending market, but the small chart told you that we probably weren't going up anymore. Does that make sense to everybody? Everything says up. The momentum is there. 1, 2, 3, 4 divergences in the same price range say that the pullback is imminent, and it pulls directly to support in a midband, and the large triggers don't follow, and sure enough, it closes the gap to those large triggers. Because when price accelerates away from the large triggers, guys, hits a Fibonacci area, it's more likely to close that gap. When it closes the gap, decisions are going to be made. They're either going to keep going up or they're going to go down. And the reality is you just don't know. It's a 50-50 to the downside, but my large triggers are up. Everything's above the fib. There's no reason to believe that a short is the right one because termination. It's probably too soon for a long, but guys, one of the patterns is when I have a bad top. Have you guys ever noticed how when the market doesn't reverse from a fib, a lot of times it seems like they try to hit that next fib? It's almost like the large crowd knows where these areas are. And very often, when there's a weak bottom and they pull back to the mid-band areas, support or resistance, A lot of times they go to that fib. They did it here too. There they just consolidated. Just patterns. Patterns, patterns, patterns. In my world, I would be more inclined to say the market may continue up than down because of patterns. Doesn't mean that it will. Don't have a trade. But what it does is it says even though I have momentum, my path isn't clear, I really don't have any interest in going short just yet. And I don't want to fight triggers. I don't really have any interest in going long. Whoops. And I just crashed. So guys, what a great time for me to take the second break. When I come back, what we're going to do is we're going to look at any charts that you guys posted. I've been through every one of the charts that you guys have posted. So do me a favor and post some pictures. I've never had it disappear belt. Go make sure that it's in your indicators. Right click and look at it. Have I ever had the order line decorator disappear from NASDAQ? No, I have not ever had it disappear. Are you sure it's on the chart that you're looking for it on? Because you have to put it on each chart individually. It won't automatically show up on all of them. So I would say double right click, go to your indicators and make sure that it's on there. Give me just 1 second. We'll take a look at it. I'm pulling my NinjaTrader back up. If you draw a NinjaTrader too much, it doesn't like it. You're in there. Did you just put it in there? Or has it been there for a while? Okay. And when you enter a trade, it doesn't show up? Like for days? Or it blinks for a second? For days? I don't know. There may be something corrupt in the workspace, maybe? I don't know. I've never seen that before. I would maybe take it off of the chart and reload it onto the chart, maybe? Yeah, that would probably be. I've never heard of that happening, but now it's probably going to happen to me this afternoon. Probably going to happen to me. Oops. All right, so I'm going to get NinjaTrader going real quick. Sorry, I had cap locks on. When I come back, guys, the room belongs to you. When I come back, questions are yours. Pete, you said I missed one. I'm sorry. Let's do Pete's real quick. Oil being schizophrenic, smalls down, large up. No more longs, no more shorts. Yeesh. Definitely sitting on my hands. I like that. Words of wisdom, right? Remember when I said that the ability to do nothing is what separates the successful traders from the not so successful traders? Guys, if you have resistance above you and none of the triggers are broken, and you have support below you and none of the triggers are broken, and you have divergences going both direction and your triggers are flat and lifeless, how on earth are you going to find an advantage there? And I think these are some of the best pictures you can take, Pete. When you look at your chart and your rules aren't met, and guys, you might want to try this. Instead of taking the trade hoping it works, take a picture and talk about why you don't have advantages. It'll really drill them into your brain. I can't tell you how many pictures I took seeing termination conditions and then not taking the trade and being so thankful. So, guys, crude oil's in a range. They've defined their range. Rule 2, Rule 2, Rule 2, Rule 2, Rule 2, Rule 2, 2, 2, 2. Guys, Rule 2 will keep you out of chop. Sid, when I come back, we're going to look at your chart. That'll be the first one that we start with. I'll let crude oil load up live in front of you guys, and I'll see you in just a minute. Any of you chili doggers get in there? That was a pretty good one. All right, Sid, let's see what you did, my friend. Sid said, check it out, Mark. All right, Sid, you have to help me here. This is a NASDAQ on the 13-2. I want to make sure that I'm reading this correctly. It's possible that your arrows are facing the wrong direction. But Sid, I see an entry here. I'm not sure exactly what you did here. So I'm going to ask Sid, are you comfortable taking pictures of both charts? Because this looks like it came off of support, retested support, and headed to the upside. And I see something happening here, but it's way off of... Like, I have no idea what's going on. Do you have a full picture, both charts? Why did you do what you did here? Right on. So when you take those pictures, guys, whether you're using Capture or whether you're using Snagit, left click, drag all the way down, and give me both of those charts. Because it looks like maybe you had support, maybe triggers rolled, maybe you got out here. It's hard for me to give feedback just based off of this one chart. There's not a lot of information there. It was after a retest. You had support, so you got in above all of the junk and got out at the junk. Perfect. See? That makes sense, Sid. That sounds like an awesome trade. That sounds like you let Fibonacci do its work, and instead of just hoping Fibonacci held, you let it hold. You let triggers roll. You got in on the other side of those triggers when things rolled. And you carried it right up to the problem spot. That sounds like a pretty healthy plan. Nice job, Sid. Really, Steve, again? Everything says down, the path is clear, you jump in and you get paid. How many times are you going to do this, Steve? Doesn't it get old making $200 every 6 seconds? 10 times a day? It's awesome. I love it. But Mark, that's not a high probability trend trade. He didn't have a pullback to an area inside of favorable large triggers. Who cares? He had momentum and a clear path. He didn't hold on for the home run. And then Steve, once again, until you get this close here, that thing's going down. Great trade, dude. Nice job. Miss Cindy. Bad top. Everything rolls, and then once everything gets below Cindy, we're still cool, even if it's not a good top, right? Everything says down, triggers down, momentum, nothing in the way. Here's the challenge, though. Here is the challenge. You do have a midband, but these synthetics are still up over here. And when these are green and everything else is red, I think it's more likely to hit it. And it did, which is cool. You get in, huge stop, and great hold. Gutsy hold. And then it goes all the way down to the fib here and bounces. It's a nice trade, Cindy. Me personally, with this much indecision, I love a reversal bar. I say that a lot. Guys, if your entry isn't perfect, it's okay to wait for a reversal bar. Like, it's all right. You feel nervous. It's because you're still new. You're still learning patterns. Then why did you take it? Did somebody have a gun to your head? Blink twice if you need help, Cindy. If you don't like it, why did you take it? Okay. And you had momentum too, right? Yeah. So, Cindy, let's try this. And let's pull some of the fear out of that if you want to. And we're going to start with this right here. And you're going to say, if you choose to, my large chart is perfect. Everything I need to feel comfortable with going short. That's pretty much what happened, right? Large chart was perfect. Everything you need to feel comfortable going short. But that's not enough. I want you to say this as well. My entry look sucks. This is crap. That's not easy to pinpoint. And where the hell is it going to go from? Is that fair, do you think? If you're looking at your chart right here, that feels about what your brain's saying. That's what my brain would say. My brain would say, large chart's perfect, but how the hell do I pick an entry? I don't have any freaking idea. So Cindy, here's the deal. You're worth it. I'll force the market to confirm the move with the reversal bar. Then my risk is 2 ticks above it. So what happens, Cindy, is you say to yourself, and let me give you this. I want you to stare at this a couple times this afternoon. And I want you to see something. If you insist on a reversal bar, Cindy, if you say to yourself, if I get a reversal bar anywhere between here and here, I'll take the trade. Is there any way that you will ever miss that trade if you get a reversal bar? No, not okay. Okay means shut up, Mark. I don't like this lesson. If you insist on a reversal bar, is there any way you'd ever miss the trade? Of course not. If you didn't get that reversal bar, Cindy, and it decided to go up, you wouldn't take the loser. And I want you to see the difference between this entry with all this indecision and where you get your reversal bar. That's pretty awesome. That's a huge difference. So the phrase is, if my entry isn't perfect, let me force confirmation. If my entry isn't right, let me get in when they say they're going in the direction of the large chart. And I promise you, it takes a lot of the stress out of this trade. Here, no worries. Everything's tight, one on top of the other. It's Cindy, you're afraid to miss the move, but you're so damn smart, you keep these huge stops. You let the large chart lead the way. Now we need to refine your entries to reduce risk, maximize profit potential, especially on the NASDAQ. Does that make sense? Good. We can fix anybody. And you're not even broken. You're an absolute rock star. But I think that you could get a lot more out of trades. And I also think that you get paid a lot more. So between better entries and better exits, you're going to be like, oh my gosh, I keep making all this money. I have to send Mark something nice for Christmas. You're welcome, Cindy. Thank you for posting. All right, so there's the same look, right? Off of support, closes the gap. Rob, great job not doing anything in the indecision area. And then here, you jump in. And your stop is right at resistance inside of favorable large triggers. So Rob, this is what I like to ask myself. What kind of trade is this? Because I like the look, and I want to show you what I see, and develop just a little bit of patience. You had momentum. Dig it. Really like it. Nice. Momentum is great. You did not have a clear path, but you had that potential there, and I love that potential there. And Rob, the trade that you really took, and just a little bit low, is that momentum style trade. And that momentum style trade says let the small triggers and price break through and let it pull right back to that fib that you are saying has the potential to break. And your entry comes from that area of resistance. And then you look to go down. And I'm guessing that that's about right where it continued down. Is that the S&P? Let's go look. Because it's a good looking trade, Rob. And I think you just got a little excited on it. So this was it right here. Mine looks a little different than yours, but I think this was it right here. And it pulls up and it goes back down. And this is the thing, is when you jump in and you lose momentum, you got to make decisions, and these become difficult to manage if you're not willing to take a shot. And then sure enough, it doesn't break. And the fact that you got out at the one-to-ones, beautiful. Because it's a momentum trade, right? And you said, holy crap, this could stop my momentum. Rob, it's awesome chart reading, dude. And it's great management. The only challenge that I have, and we're celebrating everything, the only challenge that I have is if this turns into a 50-50 trade, one of those trend trades, you're about to get stopped out right at those areas inside of favorable large triggers. And this is where on these trades I make a decision. I'll give it a couple. If it goes 2 bars up, for me, that's more than enough. I'm done. I'm out. I'll wait for the next trade. These aren't huge stops. You know, that's $200 worth of risk, or $20 on MES. That's a lot if you're only looking to make 50 or 100. So nice job. Good read. I like it. And you're in at 175, yeah. Bad top. Mid-band support holds, and holy smokes, it's on its way back up, guys. Have we talked about this once or twice today? When it comes from a bad top, that 50-50 is less likely to work, guys. That mid-band and any area around it are less likely to just automatically smash. Here they tested it, and here they retested it, and everything rolled. And now I have odds favorable momentum and the potential to break. And if I got a pullback right now, I could take this entry to a court of law. I could say, with that level of momentum coming from that termination condition that reversed the market, if I got a reversal bar right here and it pulled back to areas inside of favorable large triggers, I don't think I'd be scared about trying for the continuation up. Does that make sense, everybody? That's just a chart read. It may or may not fit your plan. Anybody? Doesn't make sense to anybody. That's too bad. I got to get better at this stuff. Weak triggers at a fib. That's a tough look for more up. It might go up, but that's not rules. And do you see how I never even got a reversal bar? But I know where my triggers are, right? And I know exactly where my areas inside of triggers are. And if I had to tell someone, hey, if this trade were going to continue north, this is the most likely spot for a bounce. So when this reversal bar prints, I've already got it. I already know where my entry needs to be. Does this guarantee me a winner? No, it's a 50-50 trade. It's a medium probability trade. I'm going to go 2 ticks above the reversal bar. And if I do get an entry, that's where my stop has to go. Right there. Do you see how I already know where my entry is coming from? I already know what my risk is. Hell, I even know what my target is if I get a trade. If I'm not in the KISS plan. Whoops. I've got it all figured out, guys, and all it is rules. Doesn't mean that they'll come get me. Doesn't mean I'll get an entry. Doesn't mean I won't lose. It just means that in the event of a pullback, I have a pretty good idea where I want it to come back to. And now my trigger lines are starting to separate. Now my large are separating from my synthetics. Everything says up from a termination. Why is that a late entry, Ed? Can I be honest with you? That's the perfect entry. Because you're not trading into trouble. You're trading away from trouble. But you're on the good side of the fib. Does that make sense? This fib could screw everything up. You got to the good side of it. This is the one that you had to worry about, and it didn't hesitate. Nice trade. I like this. Guys, this is huge. If decisions are made at fibs, doesn't it make sense to get to the good side of the fib, to the winning side of the fib, to the right side of the fib? How do you want to say it? I could trade into this. Why, Ed? You throw the bone out every freaking day. Every day you throw away beautiful winners. You got paid, man. Be glad. Stop turning it into a negative. All right. Price could return here. Price could return there. My entry isn't perfect. Therefore, my choice is to wait for a reversal bar. Because I've got a pretty big range, because my triggers are split, because it's a 50-50, in order for me to enter this trade, Cindy, are you listening? I've got indecision. It could be a mid-band. It could be this. It could be that. That's a lot of risk on a 50-50 with divergence. You know what? If it gives me a reversal bar, I'll give it a shot because then my risk is established. And because I've got room to my target from where my entry would be. Does that make sense, everybody? But Mark, what if you don't get a reversal bar? Well, then I'm not in the trade. It means it kept going down. Yay me. Not a high probability trade. Not the best looking entry. It's already got a divergence against it. I'm cool with a little confirmation. And there's a cost associated with it, guys. There's a cost associated with it. Your entry was directly into the fib. Write some rules on it for me. Tell me why that was your entry, Ed. My entry was right here and I made money and I got out right there at the very top because I'm pretty kick-ass. Why? Why was it your entry there? Why? What in your rules says trade directly into a fib? Help me. Help me understand. All right. Are they going to give us? Are they going to give us the confirmation? Oh man, this is so exciting. They didn't give it to me for 3 bars worth. Because this area didn't break, because it reversed everything, because it created momentum, because this area has the potential to break, I like areas inside of triggers. That's my reasoning. That's what I would write on a chart if I were going to put it in this room for some feedback. Why didn't you just get in right at the triggers? Because there's a lot of risk, and because that's not perfect. Because these triggers are split. Because I'm going to force them to go in the direction of my trade if the trade isn't perfect. Why? Because I know exactly where my risk is. Because initially it has to be all the way down here. If I get a reversal bar, it's all the way up there. Whoops, I didn't have an ATM strategy.
Order submitted.
So now my risk is considerably less. Where's my first target?
Order submitted.
At 82 is $100. Guys, it doesn't guarantee a winner. And if I get a second divergence on a 50-50, I absolutely hate this trade. I would exit. To be honest with you, one divergence on a 50-50 trade I'm not wild about. But we're just trying to get that little confirmation bar idea. Does it guarantee a winner? Absolutely not. But if it pulls all the way down here, I don't have to keep my stop all the way down here initially. That's huge. Underneath that reversal bar. And then
order submitted.
We're going to turn this into 1. That's my first target. That's $100. Let's see if it goes. Go market. Where's my 200? There's my 200. So let's kiss planet, guys. If my first target gets reached, then I will go break even. If a second divergence prints, I will get the hell out of this trade. Because 2 losses of momentum on an area that only has the potential to break doesn't seem like the best plan. But your plan may be different. And Wayne said, you know what? I'll just give it a shot at the mid-band. And Wayne, you got a way better entry than I did. I like it. I like your entry. But I wanted to show that for you guys that are like, man, I hope you can wait for confirmation. There's a cost. Wayne's entry and my entry, Wayne's in at 78.25. I'm in 5 ticks higher. 62.50 higher. So my confirmation cost me $62.50. And you already made your first 150? Love it, Wayne. With this level of momentum, where's the market likely to go? Probably up towards that fib if they decide to keep going up. Where's my first trouble spot? I don't have trouble until this divergence high. You guys see how a plan can kind of change when you start reading your indicators? It's fun. This is what we do when nobody posts charts. Watching that money flash is terrifying. Let me take it off the screen. Should we take our $100? Let's do that. We'll kiss planet on the first contract. $100. Is it going to get us? There it is. We're in. Oh shoot, I'm still long 3 contracts. Momentum and path, guys. Momentum and path. I'm break even. I can't lose. Let's see if momentum carries us to the fib. I'm just developing a trading plan right now. I had momentum, potential to break. I waited for confirmation. My indicators say the market is likely to go up. Where is it likely to go? It's likely to go to the fib. Oh, there we go. It hit it. Oh no, it only filled one contract at my target. I think. Why am I long 5?
Order filled.
I don't know, but that was a pretty good trade, guys. What do you think? Can you do it? Do you like it? Do you feel good about it? I mean, that was it. Live in front of you. Awesome. Waited for a little confirmation. Got paid. Absolutely. The only thing, Belt, why the hell are you so close? Oh, because you have a fib. You have something going on there. I don't know what that line is. I don't have an indicator that looks like that. But it hits your target. Your mountain fib. I hate it. You know, I bitch at John Novak all the time. I tell him, I said, stop giving yourself so many reasons. Stop giving yourself so many reasons. Reasons to exit, reasons to enter. Guys, we called our shot 100%. 100%. Ed, you took the trade and you chickened out. Wayne, you took the trade. Oh, and we have different fibs. Man, my exit right at a fib sure did look good, didn't it? I called my shot and it went down from there. But everything still says up. And guys, look at this. Odds favorable, clear path.
Order submitted.
If that fib wasn't there,
Order
that would be a rules-based entry. I don't care what the 8-3 says. My 8-3 says stranded buyers right at a fib, right at the outer band. Couldn't care less what the 8-3 says. If my large chart says that you reached your area, if my small chart says you hit your target, couldn't care less. Rob, this could do it. This could do it. And Wayne, it still may go up, and I never try to put juju on your trade or bad voodoo or anything like that. My charts say I took a rock star exit, and I don't care what happens next. And you know what? If 86.43 breaks, I'll look for my next trade. Because there will be a next trade. There will be a next trade. So guys, this is what I teach every day. Cindy, were you in here? Did you get that lesson? If it's not perfect, wait for confirmation. Reduces your risk. You still had every advantage. Isn't that so much easier than hoping something holds? I hope it is. I hope it is. I love this lesson. And then you'll get an idea of when it's time for confirmation and when it's not. You'll get an idea, but use the phrase. Man, my advantages aren't there. Let me insist. Let me insist on confirmation. Muser, what did you do? Muser says, this is a great entry. And Muser says, there's something that I learned. When I get confirmation, a lot of the times they give you a little squeeze back. And beautiful entry. Out at trouble. Right to the fib. Not a big NASDAQ trader, but the look was familiar. Good bottom, strong triggers, not a clear path, potential to break. 50-50 with divergence, rule broken, but great momentum. Not should continue up, Muser. Has the potential to break that area. Has the potential to continue up. And on the NASDAQ, fighting these small triggers when it's not perfect can be a little detrimental. I like the close on the right side, or even this one is a second chance. Beautiful job getting out, and guys, as long as it doesn't close on the other side of those triggers, it's going up. What an outstanding trade, Muser. Nicely done. Ed, you haven't been able to get patient in 27 years of trading. You're out. Why did you get out at 84? Isn't this your pattern to hold? To move stops? Did you change your plan because of what you saw on the screen? Thinking doesn't work, Rob. Never has for me. You have to run an errand. Right on, Wayne. Have a good one, man. Thanks for being here today. Guys, when I think, I screw things up. When I think, I mess stuff up. Holy moly, Steve Diego. Everything says up. Everything is strong. You get your entry. And look at that. With more experience, I have a third contract runner to hold for a close on the wrong side of the triggers. I love that. Nothing wrong with $200 though, Steve. Great trade. And then Chris T, everything says down, the potential to break, good top. You get in before the triggers, and it goes right to the area inside of the triggers. And Chris T, run a lap. Run a lap. You ready? Let's talk about it, brother. It's good to see you in here, too, by the way. I love it when you guys come back. Couple things I see, Chris. Not an area inside of favorable large triggers, right? That's your area inside of triggers, right? Well, right where it bounced. What the hell do you mean, HVA signal? That's an up bar, Chris. How on earth could that define a short? It's a white bar. And John Novak talks about white bars, doesn't he? And Chris, respectfully, who cares? It means nothing. Doesn't mean squat. That white bar is nothing. It's inconsequential. There's no rules met. It's an up bar. What you did is you took some nonsense you heard in the other room and didn't know how to use, respectfully, and you absolutely destroyed the perfect entry for a trade that was a huge winner because you thought too much. You started creating rules in your head that aren't rules. And I'm not beating you up, Chris, but I see this all the time. I need that other trade that they have. There's nothing. There's nothing there. And this is where this chart will talk you out of the perfect trade. We've seen it a lot today. You had it dead to rights. You knew exactly what you were looking for. And they went right to the area inside of favorable large triggers. And Chris, I recognize this because, man, if I had a nickel for every time I've done this, I wouldn't have to take the right trades anymore. I could lose it. And that's what happens a lot of the times, is you see it after the fact. But you've got to define. There's no such thing as an HVA signal. Does that make sense? There's no such thing as an HVA signal. Let me elaborate. This is not a signal. This is an area where if my rules are met, may create more down. And the way you use these, Chris, is when I've got an area that stops the market, this white bar here is a breakout bar. And if it's followed by a second up bar, I get this HVA line. And if this termination condition produces this, it creates this green HVA line. This pullback to that line, this is the trade. Does that make sense? That's just a down bar. That's your breakout bar. It never got the confirmation to create that line. Here we got the down bar. And once it finally formed a down bar, that's when you got it. There's your breakout bar. The second up bar creates the HVA line. So it's not actually a signal. The way I like to talk about it, Chris, is it's a line in the sand. Where if the rules are met and I'm looking for a trade, I've got a line in the sand where the sellers said, hey, if things are right, we're going to give a push here. But things weren't quite right because we weren't to the correct area yet. Does that make sense? But once we get to the correct area, rock star. And that's why you've got to let the Renko bar charts lead the way. Because you called the trade. You had the trade perfect. You just got a little excited. Got in a little soon. And you forgot that trend trades come from areas inside of triggers. It's a great look, dude. It's an awesome look. And it's a great lesson. You bought in thinking you would make $1,000 a trade. Now you're happy with a $15 winner. Rob, it's because you're learning the process, man. You're learning the process and you're trusting the process. Wayne, great entry. Awesome targets. Nothing wrong with getting out for work, man. Great trade, dude. You're getting there, Rob. And Rob, if I can say, one of the things that I think is paying huge dividends for you is you're learning the looks. You're not looking for the money anymore. You're looking for the reason that the money is made, if that makes sense. You're starting to look for the process. And guys, that's what changes it for you. Once you start worrying about the process, the money shows up. Your infrared sauna is heated and ready. There you go, Steve. Have a good one, man. Enjoy it. Wayne, have a good one. Thanks for being here. Thanks for posting. And guys, once again, Steve, before you run, guys, all of Steve's trade look exactly the same today. I don't think he posted a loser. And resistance is holding. Pretty cool. Man, you guys did great today.